Welcome to the Midweek Market Update, where I do a technical analysis and give you my thoughts on SPY the Qs and IWM. This week I also have 3 additional trade ideas for us to check out towards the end of the video, so definitely stay tuned for that. Just like last week though, these aren't the best trade ideas I've ever presented on the channel, so to make up for it, we will of course take a quick tour through our core list of companies as well today. Let's kick off the S&P analysis as we always do with our sectors here. Who was leading, who was losing, and where was the weight? The energy sector led the pack today, up 1.03%, whereas the XLY for consumer discretionary was down at the bottom of the barrel, down 3.34%. This is fairly concerning. We know that the XLY, although it's not top 3 that we watch, it is a fairly heavy weighted sector in the S&P 500. And if we think about discretionary spending, that would indicate a healthy marketplace, a healthy economy. So to see that lagging definitely is, again, slightly concerning. And then, of course, the tensions overseas with Ukraine and Russia are causing energy prices, aka oil, to kind of go off the charts, right? So no surprise to see that continue to be up at the top of our list. In terms of our heavier weighted sectors, let's get into them. The XLK for the tech sector, heaviest weight of them all, down 2.5%. If we look at the XLF for the second heaviest weighted sector, down 1.74%. Then the XLV, the healthcare sector, up towards the top of the list, but please do remember, although it is a heavier weighted sector, and by the way, that's down 0.5%, although it is a heavier weighted sector, it still is defensive in nature, right? People will need healthcare regardless of what's going on in the economic situation. So defensive names at the top, XLP just behind it as well. Again, consumer staples, another thing that consumers need as opposed to discretionary down here at the bottom, right? So defensive names at the top, heavier weighted, more aggressive growth-oriented sectors down towards the bottom of our list. Let's get into these sector charts though and just kind of see what's going on with them. What can we look at going forward? In the XLK, we were talking about in the pre-market live stream today, is this indecision doji going to be something that causes a higher low? Can we get a higher low from here to here? The answer to that question in hindsight now is obviously no. So this does set up the move now that we have highs, lower highs, so something that looks like this. Now we have equal lows. If we're looking for trend continuation, which would be downtrend continuation, we're looking for a new lower low, and that next support underneath us is roughly 143.50 coming from. If I scrunch up the chart, it was a prior breakout point from right around in here, correct? So that's what we have to the downside to look forward to in the XLK. As of right now, the bear's definitely taking control. Would it be a short early on tomorrow morning in the tech sector? I don't know, right? I would really want to see how this level starts breaking because we're a couple days down, feeling, not necessarily has to be, but feeling a little bit extended, correct? Maybe there's a little bit of a dead cat bounce, a micro lower high, so from here to here, and then it breaks on a quick reattempt. Maybe it's early next week, maybe it's on the Friday session, right? So I would be watching 147.50, this equal low area. If it breaks, we know we're looking for more downside, specifically in the S&P 500 as a whole as well, right? Noting that this is the heaviest weighted sector. Or if it starts to bounce, maybe the S&P just takes a little bit of a breather and it cools off there. I wouldn't be looking for any major bullish reversals here in the XLK, noting again that we just simply have these equal lows. And if I even do something that looks like this, just like in the S&P 500, you're starting to get a head and shoulders pattern. Now, granted, the expected move of that type of pattern is traditionally the move from the head to the neckline, and this is just like a tiny little nibble to the downside, right? So it could go much further over the course of time, but one step at a time here in the XLK, at least into the end of the week. We'll continue to monitor this, of course, but for now, noting that we're sitting right at support, I would want to see what the reaction is first before making a knee-jerk reaction, just assuming that it has to break down, correct? So that's what we've got in the tech sector. Let's continue along here and talk about the XLF for financials. Big pivotal move on today's session, noting that at first we were opening kind of right at this support. Remember, 39 quarter was coming from the pullback in here. Notice we supported off of it once. In the pre-market live stream, we were saying that we were doubting our confidence here now that we've punctured it a couple of days and we weren't immediately bouncing off of it. So to see this move lower, it's not inspiring huge amounts of confidence in the S&P 500 as a whole as well. So the two heavier weighted sectors right now, both working in unison to the downside, it's not looking great, right? And the thing about the XLF is that there could be some more room to fall. Sure, you have the daily 200 SMA here, but from a structural perspective, that equal low area would be all the way down here, 37 quarter. So this does have the potential to continue. It's not sitting right on support like our XLK is. So watch out for the XLF to continue to be a drag on your S&P 500, even if the XLK gets a little bit of a sideways day, a little bit of reprieve from the selling at its support, right? The XLF is not quite there yet, and it could be subject to some more selling pressure into the remainder of the week. If this is going to flip bullish, it obviously just has to be a recapture of 39.25, but as of right now, based on today's session, certainly does not look like the more likely scenario, right? While we're talking about financials, let's quickly move on over to the TNX for our 10-year note. And I would just point out that this is not really what's in the mind's eye of the market right now. Usually, the market is going to care about one thing or another. One day it's going to be inflation, so we have an eye for inflation. Today, it just so happens to be W for war overseas in Ukraine and Russia, right? So this is what the market cares about. It's not so in tune, or, it doesn't really care what's going on with interest rates and inflation as of right now. Now, sure, core CPI is coming out on Friday. I would imagine that moves the market, but it's going to be much more sensitive to this, right? The overseas tensions. So I'm not really going to read into the TNX too much here. You can see it's just going sideways in an overall range. As we've pointed out in the past, a sideways TNX is fine. It's not really going to hurt or help your S&P 500. If this rolls over, obviously it should benefit tech a little bit, but given the fact that, again, this isn't in the mind's eye of the market right now, it's really concerned about those overseas tensions, I wouldn't imagine that it's going to offer much reprieve for tech in general. It's still just on the back burner for now, right? So 10-year Treasury, keep an eye on it, but it's not so important in these current conditions. Let's continue along and wrap up our sectors here with the XLV for healthcare. Zooming in on this one, a little bit of relative strength, to be quite honest with you. And remember, we did note that it was at the top of our list, and it is defensive in nature. So we are still quite a ways away from that low here. Could this be a higher low? Maybe. Obviously, the market would have to turn around almost on a dime here to protect that as a higher low. However, it doesn't look likely, right? We had a day of indecision, a little bit of questioning going on at the low end of this range, and we closed relatively weak down at the lows on today's session. I would say it's more likely that we do continue our way lower for the equal low, but if it does turn around, just carry it forward as a very slightly nuanced higher low. Doesn't look like the likely scenario, but just watch it, okay? It is in the relative strength camp right now, so who knows? If the market gets a little bit of reprieve, as we've mentioned, into the end of the week, healthcare names could be the ones to watch for some sort of move here to the back test of this prior high end of the balance, right? That would be 129 in your XLV. Are you actually going to trade that? To me, probably not, right? To be quite honest with you, it's just something to watch. It's something to keep in mind, keep tabs on as we're keeping track of our S&P 500 as a whole, correct? So that's your XLV in a nutshell. Let's continue along here and talk about volatility briefly, because this has been moving off the charts with obviously all of the volatility we're getting with the overseas tension. So I know I sort of said that I wasn't an expert in it last week, and I'm not claiming to be an expert in it. Someone actually pointed out something that was really fantastic, right? When people are buying more out of the money puts, that's basically what skews your volatility, right? They're buying insurance. So the market doesn't necessarily have to make the large move before VIX actually spikes. So again, I learned something new, maybe you learned something new. What I'm getting at here is if this wants to continue and make its way into the 40 handle, then people are buying insurance. We know that there's a lot of fear in the marketplace. That's usually when we start to get it to quell a little bit, right? So if I scrunch this out, notice, let's actually go to a weekly, right? That 40 handle tends to be where we're at max insurance purchasing, all right? Let's just, play it akin to this sort of metaphor that we're using. If you're buying insurance up here, that's like peak fear. That's the peak area where everyone's like, oh, I got to be protected for the downside. And then it starts to quell a little bit. I'm not saying it has to every single time, but with the increase in volatility, all I'm getting at is if we get closer to 40, I would look for a short-term local bottom in the S&P 500. It worked fantastically here earlier on, in January, right? So if we just go back on over to the S&P 500 charts, let's go down to a daily just to talk about tradable levels, right? Here you go. There was that VIX at its peak, right? Led to a little short-term local bottom. I'm not saying we're there yet. You can clearly see that because the VIX is underneath 40, we're at that equal low. Maybe it goes a little bit further. The VIX peaks up closer to 40, and then we get that local bottom, a little bit of a dead cat bounce, right? So things to be thinking about here in your S&P 500 and how all of these sort of pieces come together to form the puzzle. So in terms of levels, right? Obviously equal low to the Monday panic sell-off. We talked about that as a likely target in the weekly watch list update video. If we scroll out to see what we have underneath us, this is where things get a little bit interesting. Sure, there was support here, and it was also resistance. But what I want to do with you guys is actually turn on the volume profile and search for targets together. I want to show you my thinking behind why these levels will be important. You can see here on the right, this is the volume essentially at price, right? It's this down below transposed at price. So if this starts to break these equal lows, the next high volume node, the highest volume node, is roughly 416, 415.50. You can see that right here, and it's also coinciding with support, and then again, high volume node in there. The next one is this little protrusion right here, and that's coming from double bottom lows right about there. Anything underneath that, this void of price action, is the $400 gap in your S&P 500. If I zoom in here, the profile is going to be gone, but there's the gap, right? It's basically to 400 even. If I go ahead and throw on the gaps, there you go. 403.38 down to $400.67 is the gap to be looking for. Now, I'm not saying we get all the way there into the end of this upcoming week. I'm just pointing out where these targets are coming from based on volume profile and prior structure, okay? So that's what we've got to the downside if we see rollover here. If we see any little bit of dead cat bounce, and we're just going to turn this volume profile off now. Let's go back to our moving averages here. I'll get rid of the 20. Not really serving us too much good. It's way up above. But basically, if we get any sort of dead cat bounce, it's all about 428.50. Why is that the number? You can clearly see in here, it's the low end of consolidation, correct? So if we fail to get back inside of that area, you're basically looking for, there's your micro dead cat bounce that we discussed in the XLK. Any reattempts for here, equal low in short proximity of time. That's where your breakdowns come from. 415.50, 416, first downside target. Anything underneath that, as we pointed out, gets closer to 405, gap fill down to 400, right? So that's what we've got to the downside. To the upside, we talked about the back test of this. Anything above that, we know the breakout point from right around in here was 437, right? So that would be the sort of better, maybe I shouldn't call it better, but that would be the higher, rather, upside target. It's as simple as that here inside of the S&P 500. I would really start to focus on this as a pivot. Anything that remains underneath that 428.50 is building out bear flag consolidation, correct? Something that looks like this. We would look for breakdowns and trend continuation off of something that, remains below that level. If we poke up above, maybe there's potential for something that does this, high or low. We'll reassess. Very speculative for now. Obviously, there's a lot of selling pressure in the market. We'll see. One step at a time. I don't want to be overly convicted one way or another. We all know how last week's video went. It didn't go well, right? So let's continue along and talk about our market internals to see what else we can learn about this price action. If you're not familiar with this screen, get familiar. Top right-hand corner is going to tell you what this all is, how you can set it up, and how it'll help you make better intraday trading decisions. The first thing I want to point out that's sort of a big question mark in my mind is the fact that if the market was so bullish, then why did we have volume on today's session? At least that's what I'm referring to, today's session. Then, and I hope I said bearish. I'm sort of second guessing what I said. I hope I didn't say bullish. The market was supposedly so bearish today, is what I'm getting at. Why was the volume fairly choppy around the zero line for the bulk of the morning session, even though we were selling off aggressively, right? To me, it would have built and it would have kept going lower and lower and lower, and we would have had some obscene read that was closer to, I don't know, negative 600 million if it was the end of the world and people were truly rotating out of everything that they owned, right? But instead, sure, we did make it to that threshold mark, the minus 300 million, but just not in the manner that I would have expected, right? So I don't know, kind of interesting to me that it was one of the more bearish days out there, but volume readings weren't really adding up with that. We also never had extreme panic reads, like things that were, I don't know, 7 to 1, or that's negative 7 to 1, negative 8 to 1, negative 9, 10, 11 to 1. That never happened today. So that does strike me as fairly interesting. It doesn't mean that it's long. It doesn't mean that this is a fake move. I just think it's interesting to note here and a bit of a divergence based on price action, right? The same thing would seem true in the advanced decliners, the fact that we didn't spend all day down here in trend zone, and it's really that the move developed over the course of the day. Maybe this is because it's more headline driven and not so much based on the underpinnings of the marketplace. It's something to consider. It's a theory that I would definitely, accept as valid. So that could be one explanation here. But nonetheless, the internals aren't really pairing up with that. And then the tick as well. Again, if it was such a bearish day out there, if everything was moving lower across the markets, then why was our cumulative build nowhere close to what we saw on the Tuesday session? And again, I get it. Tuesday was a bearish day as well. We're still talking about significant reads here, minus 4,000. It just doesn't strike me as, pairing up with the type of day that we actually saw out there on today's session. That's all I'm getting at here with our internals. Again, a little bit of skepticism. I do think it's because we're in a primarily headline-driven marketplace right now, but these are the things I'm thinking about. I want to share them with you. Doesn't mean the market has to turn on a dime tomorrow because we're seeing slight divergence. I would just be a little bit skeptical about shorts. Sure, you might be able to catch a momentum move here, but in terms of a longer-term sustained move unfolding, I don't know, internals don't really support that sort of theory. Let's move along here and talk about the market profile. Again, I've got another video for you if you're not familiar with this type of software. Top right-hand corner will help you understand some of the terms I'm about to use. The main thing and what's really driving, in my estimation, my continued bearish sort of slant on the marketplace is keeping it simple, right? If we think about where value has been developing, here's value in an overnight, overlapping, right? So from here to here, we get an overlapping value session. And what happens on today's session? Well, value has clearly been established lower, right? So that has to be more bearish. More volume has been transacted at lower levels, indicating that people are not interested in doing business up here. That's just a bearish fact, right? So the fact that value is continuously moving lower strikes me as being bearish. Obviously, the point of control was left low on the profile. It's very thin, meaning that we had a very emotional trend type day. So again, do with that with you will. Usually, this is not sustained. The market would need to digest itself at one point or another, and we sort of saw that with the internals as well. We noted the equal lows. Maybe it doesn't just break on the first touch. Market profile here is sort of, saying that, hey, that doesn't seem like an outlandish theory as well. The one thing I would point out that I want you to carry forward is the poor high, very poor high from the Tuesday session, right? We have 3 TPOs across on the top. If we are going to get any sort of upside move and we retrace today's session, that should be a target. And then any higher low pullbacks that reattempt it, that's going to be a breakout point, right? We know that there are stop losses stacked above that to the short side. If we take it out, that to me is a trigger point for a long. Okay, so definitely carry that one forward. And just to give you a level, that's going to be roughly 43.58 up to 43.60. All right, that's what I've got for you in the market profile. Let's go back on over to the software here, the platform, and round out our broad market with the QQQ. This one making a new lower low, a little bit different than what we saw in the XLK, right, the tech sector of the S&Ps, but nonetheless, this is bearish, right? So now we certainly have high, lower high, correct, low, now new lower low. 2 of those puts us in a more medium-term downtrend. Obviously, the short-term downtrend has been in effect. You get the gist, right? This is more significant to the downside, giving us more development for a longer-term trend. Downside targets are going to be 324 on the downside, coming from prior gap in here. And then we also have another gap underneath, also the double bottom lows, roughly 315. Just to keep things congruent here, we'll also quickly pop on our volume profile, see if that's matching up with what we're sort of seeing here. I don't know why the volume always does that on Thinkorswim, but we'll adjust that, make this a little bit more bearable on the eyes. And yeah, you can certainly see how we do have a high volume node right here. Then it tapers back off just a little bit. And then the next high volume node is that gap fill down underneath, correct? So those would strike me as being reasonable for downside targets based on structure that we saw off to the left here and the volume profile where there's high volume nodes. So that's what we have to the downside in the QQQ. Let's pop on our moving averages and we'll remove the 20 because we don't like it today. And in terms of upside targets, very, very similar to your S&P 500. If we zoom in here, firstly, it's the back test of the Monday panic low at the 334 quarter. And then after that, it's the low end of the consolidation range right around in here. That number is going to be 340, we'll call it for round number's sake. If we start to get up into those areas, it's still not really somewhere where I would be looking for longs. The long trade is if we can recapture this level right here, 343, let's call it 344 even, right? Because it's the low of the little dead cat bounce. It's also the high, exactly where we backtest and resist on the Tuesday session. Clearing today's high, maybe there's a quick scalp to be had into 353, but it's not looking promising for longs. We've talked about now, the fact that we've made this new lower low is cementing the more medium-term downtrend. It's more bearish than bullish, obviously, out there in the QQQ and the tech sector. So enough of that. Let's continue along and talk about the IWM continuing its rotation for the look above and fail. Just going to minimize that a little bit. There we go. So here's your balance range, right? We talked about the look above and fail once, look above and fail twice, back in, making the move to the bottom end of the range. I would definitely start to book some profits here, at least half the position, and then monitor for continuation to see if the rest of the broad market wants to continue to fall apart. We'll see, right? But definitely take some profits here if you have been short in small caps from the top end of the range because that pattern has been completed. If you're not short already, then what I would watch for is because we now have something that has done this, any lower highs that stay below our 197.15, set up the breakdown here to easily get you to the panic low from there. It's roughly 188, the whole dollar. And then underneath that, we have 184.50, 185 coming from prior structure. It's not even going to show up on this screen. It's because it's before. Let's actually just do it. Let's go out to a weekly. If I do something like this, you can just barely see. You could only see it on a daily, I suppose. You can't even really see it here on the weekly, but you take my word for it, okay? You can go look and find it yourself, but there is a small little bit of structure there. It's not anything dramatically important, but that is the next structural element. And just to, again, keep things congruent, volume profile, what does it have to say about that? Well, notice that there's basically nothing in this area, right? We know that there's not a whole lot of support in this area because the move was straight higher on the weekly. The next high volume area is the gap fill all the way down below around 164. Now, I'm not saying that the IWM gets there this upcoming week into the remainder of the week, but I'm just pointing out where the structure is, right? Over the course of time, if this, we don't want to edit, we want to remove, talking and doing at the same time, not working so hot for me today. Let's go down to the daily. And again, if this continues to be a protracted downward move, that's where your target ultimately is. Let's call it 165, right? Not saying it gets there on Friday or even next Monday, right? But if we start to take out these levels, just remember there's not a whole lot of structure underneath us. That's all. If we get the bounce, again, anything that does this, bear flag consolidation, recapturing that level right here around 197, look for the top of the range, right? That would simply be a bounce, right? You're playing the sideways channel from here to here, right? So and a really, really aggressive trader in IWM small caps might say, oh, I think it's a long here for the top end of the range. Fine. I wouldn't necessarily be willing to take that trade right now, but if you do, stop loss has to go just underneath. That would make sense from a risk reward standpoint, right? So that's what I've got for you in our broad market. Let's continue through our core list of companies now and just get these done and into the three trade ideas. Apple, clearly bearish here. You'll get the sense that we are back down underneath that pivot point where the breakout stemmed from. It was also the top end of this balance right around in here. And the target now is the low end of that balance around 157. Really weak close down at the lows after an indecision doji here. So to me, the opportunity that presented itself, on that day, if it was going to bounce, it needed to bounce the very next day. Take out the high, continue on its merry way higher. This is a bearish close, again, at the lows and underneath the low of the prior day. To me, it would make sense that we trickle down below into that 157 structure. If the move is higher, just like everything else, it's not really a long until we can get back above 167, where we had that failed back test, right? So patience, and then something like that could set up a move into 171, the bottom end of the prior flag that we were monitoring. Obviously, it's not a flag anymore. It's just structure to pay attention to. Next up, we have Netflix. Nothing really going on in here other than the lack of support underneath us. If I just adjust this, make it easier on the eyes, you'll get the sense. Again, early this morning, we back tested. We talked about this in the pre-market live stream. Tune into those if you haven't. We talked about any back test essentially of 387. Look for lower, right? And we did get that lower. We're closing inside of this range here. There's basically no support till we move to the bottom end, roughly 350, 267. Okay, so continually looking for bearish trades here in Netflix. Next up, we have Tesla. Horrible day in Tesla. Didn't get any sort of significant bounce, at least off of the 800 level. And, we closed weak right at our next level. So to me, looking for more downside, volumes increasing here. People are sort of bailing. This is all overhead supply. Even this, you can think of as all overhead supply. Next downside target, 726.50s. Coming from this prior resistance, which then turned into support right here. Could easily do that into the remainder of the week, given the amount of range that Tesla can travel. That would not be unreasonable for 2 days. Again, it could even be lower than that, but one step at a time here in Tesla. I do think it is starting to, again, quote unquote, feel a little bit overextended to the downside. So maybe there's a bit of a dead cat bounce, some reprieve for the buyers. But until that actually happens, just like I mentioned, one step at a time. No reason to get overly bullish in Tesla until we can recapture this level right here. Let me zoom in on that for us. That level is this one right here. And again, prior lows, then turning to perfect backtest resistance. If we can get over 853, maybe there's a bullish trade to be had for the backtest of 900, but one step at a time. Maybe that's the motto of today's video. Alibaba up next. Not a whole lot to comment on here, especially with earnings around the corner, other than we're at the bottom end of the range, right? If you were, a really, really aggressive long trader in Alibaba, again, just like in the IWM, maybe you take a long here for a bit of a dead cat bounce. Stop goes just underneath. I wouldn't hold anything through earnings. Obviously, increasing sell side volume here doesn't look great if this breaks down underneath let's call it 110 even. Next support is 100 psychological, right? So that's all I've got in Alibaba. Let's not spend too much time on it. Facebook up next, continuing on its merry way in the downtrend. Not a whole lot to discuss here either, other than just look for continued bearish activity. We got a close underneath the prior day's low, 2 equal highs, failure to get into the resistance trend line. If it does produce a little bit of a dead cat bounce, Again, anything that resists at the resistance trend line is fair game for shorts if we start printing indecision dojis, inverted hammers, basically anything that gives you a lack of confidence in the buyers at that area. Shorts underneath 207. If you're looking for longs in Facebook, it's got to be a break of the resistance trend line, which we're not really seeing as a likely scenario, at least as of right now. NVIDIA up next. This one failing once again at the 240, right? We talked about this again in the pre-market live stream. Tune into that if you're not. Here we go. Failed backtest, and we did make it closer to that 220 target. Now on this one, I wouldn't be as willing to go short on this into the end of the week, noting that we have this support here. I mean, sure, there's a little bit of range there for day trades, really quick scalps in and out, but I would be patient on this one and wait for the next setup, right? The setup today was a break of the 2-day lows, or the aggressive short failed backtest once again of 240. We got that. That has unfolded. I would be patient and wait to see what the next reaction is here around 220. Do we get a bit of a dead cat bounce, equal low in short proximity of time? If you've been watching the channel or even today's video long enough, you know that that's a short, right? You look for a breakdown of that equal low for trend continuation. So patience kind of here in NVIDIA, wait for the next setup just because we have this complicating factor of prior support, also the daily support trend line, all right? So next up we have Microsoft. Again, bearish trade here, closing underneath the lows, basically in an area of non-structure. So we're just looking for the continued move into about 275 in Microsoft, equal low, and then maybe we get a little bit of a dead cat bounce. I'm not entirely sure because we're kind of in no man's land here. If you're not already short, maybe you wait for an intraday pattern only and take a scalp. I wouldn't overstay your welcome if you're not already short from either the breakdown of this level here, the backtest of 300 for you swing traders, right? Scalpers, obviously we're playing on a different sort of frequency and we can be in and out based on intraday patterns, but I would start leaning more bearish than bullish based on the fact that we have basically zero structure here inside of Microsoft to the downside. Next and lastly, Amazon, beautiful gap fill on today's session. We made it all the way home, right? Not perfectly, but pretty darn close. If I just expand this, we're off by a couple bucks, which is nothing when you're talking about a $3,000 stock, right? So to me, next trade is patience as well in Amazon. Do we get a little bit of a gap fill reversal for a dead cat bounce? And then anything that goes like that, you know the drill, H pattern, short proximity of time, equal lows, look for the breakdown. If not, next long trade is probably a patience play as well. Again, if you're a firm believer in Amazon, you're a big Amazon bull, you notice that we're at the top of this prior range. It's the gap fill. If you were looking for longs, that's fine, but you do need to use a tight stop loss here. Otherwise, it's just a clean rotation to the bottom end of the prior range around 27.65, right? So if you do it, respect the stop loss, and that's all we've got for our core list of companies in both directions. Next up, let's get into these trade ideas. First one is on AMAT for Applied Materials. And zooming in here, if we grab the other tool, all you'll notice is a beautiful bear flag on the daily, right? Lots of level. Let's just clean that up, actually. That's fairly hideous. I apologize for that. Let's make it simple. Just one level and one level here as well. There you go. So bear flag, we discussed that, right? And also, let's just take a quick check with our Fibonacci's from the high all the way down to the low. Most of the consolidation was well underneath the 38.2 from the high to the low, so that strikes me as bear flag acceptance. You could even just start to look at it as a range, correct? We're breaking down to the downside, obviously, in this range. So next up, targets underneath. What do we have? Let's look left here. Could easily make a move if we grab the other tool and try that again to the low of these consolidation points, also the low of that panic day there, around 124.30, we'll call it. So about a $5-ish move to the downside available here if we get continuation out of this overhead range. As always, take off about half the position, maybe 3/4 of the position there, and then monitor for continuation on the rest with a trail stop, right? So bearish trade idea here inside of AMAT. Also, let me not forget that whenever we're dealing with ranges, you could also be a bull, right? Do something like this, look below and fail, target's technically the top end of the range. So a number of ways to skin the cat, and Applied Materials giving us some opportunities here at the low end of the daily range. Let's continue along. Next one's going to be on ANET. And this one is a bit of a longer term idea. Before even zooming in, I'm sure you can see it. Just a head and shoulders, right? Boom, 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 boom. Kind of getting closer to that neckline breakdown point. I'm not saying it has to break down this upcoming week. Technically, you know, we start filling the gap underneath us. Apologies for the grammar. Underneath 116.50s. 116 even basically takes us into 103.50s, right? Daily 200 SMA as well. So bearish pattern, big gap to fill underneath, something to watch out for, right? So that's ANET. Probably would not be playing it long here, noting that we have highs, lower highs. Obviously, that's part of the head and shoulders pattern. You could also just look at it like this, H pattern, you know, bearish here. It's got to be bearish inside of ANET. Not really seeing a reason to go long here. Then the last one is on JPM for JP Morgan. That's going to round out our trade ideas. And what we've got here is a move. What was I what was I thinking? And I apologize for this. I have it written down. I'm not really seeing why I wrote it down, other than the only thing I could see is the break of that, right? If we get the break of these lows, okay, that might have been what I was thinking. If a break of those lows gets us closer to here, maybe the 142, I don't really want to make up trade ideas on the fly. It's on my sticky note. I wrote it down for some reason, but nonetheless, that's the only thing that I can sort of see. Apologies if this one doesn't really fit in, but nonetheless, support. If it breaks, we are looking for a rotation here, noting that the move higher, probably thin structure in there, just the lows of the double bottom, right? So that's one trade idea. Again, here we go. This is one of those reasons why I'm not overly confident in any, not any, but the three setups that I presented to you towards the end of the video, and I gave you that disclaimer in the beginning. That's why, right? When I zoomed in on the chart, it's like, I don't really see the setup clearly. I had to take some thinking about before I was like, okay, maybe there's something here, right? So that's really all I've got for you in today's video. If you enjoyed it or learned anything new, let me know in the comments section or by giving the video a thumbs up. Don't forget that our secondary channel is linked in the description, and all of that being said, I wish you a green trading week.